Welcome to Lesson 6 for Accounting 304 Ethics. For this lesson, we're instructed to read chapters 16, 17, and 18, found on pages 105 and 106 of the text. In addition, we will examine chapter 20 in order to be able to answer the discussion question that follows, namely 6.1. There may be additional items that we will look at suggested later on based on some of the discussion questions. Chapter 16, to begin, Rule 102 states simply that the auditor member shall be free of conflicts of interest and shall not knowingly misrepresent facts or subordinate judgment to others. These are described as the virtues of integrity and objectivity. And that's it for chapter 16. Chapter 17, Rule 201, lists and briefly describes 4 general standards for the practitioner or CPA member. Number 1, professional competence. Should be able to do what you claim you can do. 2, due professional care. Should do it completely, fully, without shortcuts. Adequate planning and supervision, speaks for themselves, and to examine sufficient relevant data to arrive at sound opinions. That's it for chapter 17. Chapter 18, Rule 203, states that all departures from principles should be based on new legislation or on a new form of business transaction. In other words, any existing practices that are covered in the code, one should adhere to the code. Rule 19, or Chapter 19, Rule 301, states that confidential information will be disclosed only with the consent of the client, subject to the following exceptions. Number 1, a peer review that we can disclose, but only in the context of the review. That also must remain secret. Sale or merger of the accounting practice, as long as the purchaser agrees not to disclose the information during the sale or the merger. Under subpoena, or that is by court order, one may disclose. And finally, under a third-party signed agreement to preserve confidentiality together with appropriate controls to prevent unauthorized disclosure. Otherwise, confidentiality, very important. Chapter 20, finally, Rule 501, lists acts that are discreditable to the profession. In reality, what they give are the professional standards to adhere to rather than the bad acts. Let's take a look at these 4. The client provided records should always be returned upon request. Bad form would be to keep them. Records may be withheld only if the engagement is incomplete or payment for services has not yet been made. Number 3, working papers are the property of the auditing firm unless the law states otherwise. And finally, number 4, the CPA code generally requires the return of all loan documents. The last 2 discussion questions are of a general nature discussed throughout this course. Let's take a quick look at them. Number 3, discuss matters to be disclosed to the client. And number 4, discuss that a member accept a commission for the sale of life insurance policy. When is that appropriate? When not? We know the 5% rule, having discussed it recently. The first 2 discussion questions are covered by the material presented in the readings. Number 1, discuss acts discreditable to the profession, meaning things you shouldn't do, things that discredit you. Don't do them, like keep documents when they've been asked for. And number 2, discuss the duties of public service and the fiduciary duty to the public Fiduciary is an interesting word. You should look that up and add it to your vocabulary. Fiduciary means having to do with matters of finances or property, and a fiduciary responsibility means you put the client ahead of yourself as the agent. You have a responsibility to take care of them because they do not know the rules and the laws and cannot take care of themselves. This is the basic concept there. Okay, that should wrap up Lesson 6. Look forward to grading your answers and leaving with you a video next week to cover Chapter 7. Thank you very much.